So now I'd like to introduce Anne Finucane, Vice Chair of the Bank of America, who's responsible for strategic positioning and leads the company's environmental, social, and governance efforts. Anne is joined by Rachel Kyte, CEO and Special Representative of the UN Secretary General for Sustainable Energy for All. Welcome to the stage.
I gather we can pick any chairs?
Yes.
Thanks. Hi, nice to see you.
Hey, how are you? I feel like this should be sofas.
So do I, and that a few more should join us.
Good morning, Climate Week. How are we? She persisted. Okay, that went over some people's heads, but but seriously, so I'm really delighted to be joined by Anne Finucane today because I have a whole bunch of questions about how we keep the momentum going. So Bank of America has had a long history of being one of the leading banking voices on climate issues in general. I mean, you know, Declaration of Interest, Bank of America was one of the corporates that really got sustainable energy for all going long before everybody had understood how important it was. So now here you are, vice chairman, one of the few women, the only woman to be a vice chairman of a big bank, I think.
We just say vice chair,
vice
so there's
chair,
like no gender after it.
We've neutered
the gender thing.
So you know, where does the motivation come from now? How do you keep driving forward for results from a climate perspective?
Well, actually, the motivation is greater today than it was 10 years ago because we've seen real results. And when you see real results, you can get the enthusiasm of a much larger group of bankers than you could in the early days when it was some tough sledding because it was an uncertain outcome, and certainly people didn't see the business opportunity, and they do now.
So you've famously sort of made a $125 billion commitment in this area, which has a number of different components.
Right.
Can you talk about how that's going, or what, you know, again, how that came to be and how you think that might grow in the future?
Well, $125 billion wasn't really a specific calculation. It's just the number we thought was reasonable to get to. I think actually, so this is, we made the commitment from 2013 that would conclude in 2025, $125 billion into energy efficiency, low carbon, however you want to define it. So we're 2016, we're already almost at $15 billion at the conclusion of 2015, so 16. So you can see our momentum is such that we will surpass the $125 billion, I'm sure. It's a combination of things. Green bonds is a big piece of it. Underwriting green bonds is about a third of it. I mean, to date. I don't know what it will be in the years to come. Tax equity investments are good. Just sheer project financing and financing into wind, solar. Energy efficiency is big, particularly in the real estate world. So these businesses need the help. And with the exception of issuing green bonds, they all get market value.
So in the run-up to the Paris Agreement, in many of the sort of investor meetings with the insurance companies, meetings with retail commercial banks, investment banks, one of the big sort of cri de coeur from the financial sector was, you know, we need predictable long-term signals by government. You know, if that happens, then we have an environment into which we can do more good things. You could argue that while Paris is that dot on the horizon to which we're all headed, the regulatory environment, the authorizing environment's gotten a little less clear,
right,
especially in this country. What does that do to the way you think about the future, but also how you help your clients think through the future?
Well, the thing is that we don't think in terms of presidential administrations. We think in terms of decades and generational issues. So I think we're convinced, and I think 1,000 other companies are convinced, just in the U.S., I'll talk about the value of investing in the energy sector. I mean, just as an example, in 2011, we had twice the coal commitment that we had renewables. Today, we have 10 times renewables to coal. And that's business. I mean, yes, we had an intention, but I couldn't have told you that was going to be the outcome because the business is going there. So once you have the business momentum, the regulatory issues can slow us down. They can be impediments. They can increase costs, therefore lower margins, but the business is there.
So if you were in Gary Cohn's meeting this morning, what would be the one thing you would say that he could do that would make this go even faster?
I don't know if I'd be talking about the environment to him, but I think if the administration would even just ease up the rhetoric a little bit, because the reality is the business community is there. The business community is, we can't just stop anyway. We've made this commitment. We're making money at it. We and not just us, Goldman Sachs, JP Morgan, Morgan Stanley, we're all making money at it. Some of us maybe are more enthusiastic than others, but what I would say is embrace what the business community sees as an opportunity, but I think that he is embracing it. And I think that over time, we might see less comment on it, perhaps not more support, but less comment on it.
So while all of the drive for good and the involvement that you've played in different initiatives as well as for your own account in pushing the business, you still have, I mean, the number that I got from the research before coming on stage was about an exposure of about 13 billion to sort of fossil fuels still. Is that just a tail risk for you as you transition, or how do you think about the risks of that piece of the business given that you see where the future is headed, presumably?
Well, fossil fuels is sort of a big category. I think we see a lot of risk in the coal business. And actually, the coal business, just as a business, has its own issues. Let's forget the environment, just look at it from a pure business risk perspective. That's where the regulations are such that without carbon capture and the right kinds of technologies going forward, that business is facing a lot of headwinds. So whereas natural gas we see as being a necessity, there are parts of the oil business we see as a necessity. But as renewables grow, and we see real progress in wind and solar, and these are more efficient, I mean, in all sorts of ways. When we're dealing with a client, and I'll just use sort of a boring idea here, but we issued a green bond for the city of Los Angeles so that they could change out their current lighting to LED lighting. Well, that immediately lowered their electricity bill. So you're able to pay for the bond and a coupon at a lower cost than you could 6 months earlier with the more antiquated lighting. So when you see that kind of business trajectory, and I could apply that to the city of Oakland. We could talk about a Chinese electric car company. Each of these sees an opportunity where it costs them less to do something more environmentally progressive over the long term. Universities, big skyscrapers, when they do energy efficiency programs, and whatever they put out for a bond is going to be paid for by just their energy savings. This is just good business.
So can I just, I'll pivot a little bit. I'm assuming that there are certain meetings where you're the only woman in the room. Is that right?
Not in my company. So in my company, we have 40% of the senior executive team are women, 30% of the board are women, half the company in management are women. So I think that might have been true 10 years ago. For us now, it is, I think we look like Canada.
Okay, so you're doing better than the energy sector, because I'm often still the only woman in the room. Do there's all of these studies and sort of evidence around diversity and risk and better decision making. Has that been your experience as well as the...
Yeah, so rather than connect it to the environment, if I connected it to the financial crisis,
Right.
so we're talking almost now a decade. I do think that had there been more women in the room, you just have a diversity of thought that was not as present then. And I think that when questions are asked and answers are required, rather than nobody asking a question, then I think some decisions would have been taken differently. So I think it makes a big difference.
So I want to finish our conversation by talking about the next generation. This is a problem on our watch, but it's going to be solved by us and those who come behind us. What would you say to young people, especially young women coming out of graduate school, about why a career in the financial services could be a place where they could make a big change for climate? How would you entice them into?
How would I pitch them?
How would you pitch them?
Well, first of all, I would just give them statistics I just gave you of just what the management looks like. Secondly, I talk about we're putting capital into what matters. So whether it's communities, making we're sort of like the financial transportation system into communities. We do a lot with gender equality in women, because if we can get, particularly outside the U.S., if we can get more women into jobs, particularly into management, it helps the local economy and it helps decision-making entirely. And then on the environment, we've made a $125 billion commitment. As I said, we're about almost $50 billion into it. Today, we're publishing an economic impact report, and we took just a fraction of that. We took 12.8 billion of that, because we had to go just with the U.S. investments and just the ones we had directly financed without anybody else involved, so it was a cleaner look. And we were able to see that just with that, we could generate 40,000 jobs a year at medium to upper level salaries. The economic output is about 30 billion, and the GDP is almost 15 billion. And that is done by Ernst & Young, not us. So we always have a third party do that. So whether you're talking about economic impact, the 125 billion, the commitment to capital deployment, or the fact that we have good diversity in our ranks, I think that's pretty compelling.
I'm looking down the front. Have we got a couple more minutes? Yes, 2. Okay, so I'm going to. Here we have, right, doing it by herself. There you go, making things happen. So a couple of questions from the audience, and then I'm going to wrap up.
So in the first, we don't actually support the Dakota Pipeline, but we do provide those that built it. Some of the people involved in the sort of supply chain of it, we bank, but not specific to the Dakota Pipeline. So it's hard for me to parse out what part of our loan went there. Having said that, it's there are problems on two fronts. One is an issue of sacred land, and of course the other is about the environmental issue. We've been in discussions. I don't have an easy answer for you. Mm-hmm. What I can tell you is that I've given you some sense of the momentum we're on, that we were once very heavily invested in fossil fuels. We are much less invested in it today. I don't think that natural gas is the same as coal. I mean, we can disagree, but that's what I think. And I think that you will see more and more of a commitment to renewables because we see greater and greater business there.
And on resilience?
On resilience, well, that was sort of a complicated question because I think you're asking what role will we play. The first thing we had to worry about is we have exposure ourselves as a company. Mm-hmm. In Texas and Florida. These are two of our biggest states, and also lots of employees. So the first thing we had to do is look out for our employees. Second is to look out for our customers. We think there is a magnitude of, I don't know what the latest number is, but it is enormous. So I think there'll be a lot of business there. We work on a municipal basis, a state basis, and a federal basis in terms of helping finance what will be, I think, the recovery. There are some issues in terms of flood insurance, et cetera, that we'll also have to try to help with. On the very short term, what we tried to do with our customers is to let them know, don't worry about late fees and this mortgage payment. We can sort of deal with that in the weeks and months to come. So safety first was the issue.
Yeah, I think the last number I saw was that for Harvey alone, the insurable losses are about 30 billion, not counting the uninsured losses. So yeah, massive.
The big issue there for us is that I think for everybody is the water.
Yeah.
You know, they say it's not that there are more hurricanes, it's just the ferociousness of them. And the water issues are going to just be, whether it's the contamination of water or the water damage. So this is a magnitude beyond anything we've dealt with before.
Yeah. Yeah. And I think what some people in this audience probably wanted to hear was people other than the Weather Channel pointing out that one of the reasons for that is that the temperature of the ocean is at least 1 degree higher than normal.
We would agree with that.
I just want to say that, you know, as I talk to corporate leaders and I talk to financial leaders, there is a sense that perhaps on the government side things are starting to get a little sticky, perhaps. Not that they're slowing down, but there's a sort of sense of we're getting into the real grind of making things happen now. This is 2 years after Paris. We've got to sort out some of the little details which will trip us up. But also there's a certain amount of uncertainty, and there's a lot of inward looking in different parts of the world as different crises hit in different unexpected ways. And so the momentum that Anne's talked about in leading companies in the financial services sector, the momentum that I hear coming from CEOs of, in my case, you know, energy, transport, etc., is terribly important. And telling that story of why that momentum is still there and how to build on it and what government can do discreetly, even if it's stuck on some other bigger problem, I think it is really important. And all of this depends on actual individual people turning up, taking leadership roles, doing what they say, saying what they do, and making a difference. And as we've seen, having more and more of those be women as well as men in boardrooms and in C-suites across the corporate sector in every dimension of the economy is increasingly important. So please join with me in thanking Anne Finucane for being one of those leaders and for all that Bank of America is doing. Thank you.
Thank you, Rachel.
Well done. Thank you.